Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down both from an order flow and technical perspective. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move. And in doing this analysis, I will provide as much free education as possible. So I really suggest that you stick to the video to the end. So without further ado, let's go straight to the charts. In today's video, I want to speak about USD CAD because at the moment we do have quite interesting price action and structure. Now, as usual, first I will be covering the technical side, then we will move to the order flow. Now, starting here from the monthly time frame, what we can see is that we have a market which has just created a very strong impulse to the upside, followed by this correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we had a perfect 50% retracement. The market tested its zone and at the moment is starting to reject it to the upside. Now, in a situation like this, what we could expect is more potential bullish continuation for the market to complete this impulse correction and impulse pattern to the upside. Now, dropping down on the weekly time frame, what do we have? Now, here on the weekly, we can notice how we did have the creation of this W formation. In general, after the creation of a W, you expect the market to create a move lower to go and complete the W formation at the neckline, which is this previous resistance turn support, which can be easily identified by placing this box at the wick of this previous red candle. This zone is currently previous weekly resistance turn support that we could expect this market first to test and then to reject higher. Now, if we go down on the daily time frame, what do we have? Now, here in the daily, I did speak about USD CAD a few times in the past. I spoke about it after this impulse and correction. From here, I made a full breakdown explaining all the reasons for which we could expect this rejection lower, which is in fact exactly what the market gave us. Then from here, we had the creation of this move to the upside. From here, I made another breakdown explaining all the reasons for which we could expect this rejection lower, which again, the market gave us. Then we had this impulse and correction. From here, I explained all the reasons for which more bullish continuation could be expected. And then we had the creation of this M pattern. And from here, I explained why we expected this rejection higher, which the market is currently creating. And by the way, I will link in description all this previous analysis, so you can go and check it out for more free education. You find it all down below. Now, here on the daily, what we must notice is that the pattern that the market is currently completing is this previous M pattern. In general, after the creation of an M pattern, you expect a move higher and completion at the neckline. Now, that is exactly what the market did. But the neckline, by definition, is actually previous support turn resistance, which is essentially this one, this previous support turn resistance. So even though on the monthly, we do expect more bullish continuation from here, and on the weekly, we could expect as well more bullish continuation. From a daily perspective, it's pretty clear that at the moment we are at the decision area because we are at the resistance zone that if the market will reject it lower, we will go and test the weekly support and then potentially move higher. But if the market manages to break above that zone, at that point, the market could first go for a retest and then continue higher, essentially creating this inverted head and shoulders. Now, before we dig deeper here into the technicals, let's first go and check what we have when it comes to the commitment of traders. Now, this is the COT data, so what the non-commercials and the biggest speculators in the market are doing. Now, if we check the data for the CAD, what we can see is that with the last report, we did see a decrease of the net positions. We went from minus 16K to minus 22K net positions, with 1.5K shorts added with the last report and 4.4K longs getting closed. Now, this indicates that CAD USD is getting weaker. Why do I say CAD USD? Because all currencies on the spot are traded against the USD. So if you're checking the data for the CAD, you're actually already checking CAD USD, but since we want information on USD CAD, we simply have to reverse everything that we read here. So CAD USD is getting weaker, meaning that USD CAD is getting stronger, and institutions are expecting a move to the upside, so they're adding longs on USD CAD. Now, as usual, we have to approach trading in a reactive way and not predictive. We don't know from here if the market will first create a test of the weekly support and then a move to the upside, or if it will immediately break above the zone and then potentially create this inverted head and shoulders. We don't know that. However, what we do know is that previous support, which is this one here essentially, that is now being broken to the downside, is now turned resistance. But if we do get a daily break above the zone, it will be once again acting as support. So what we can do, being traders that react to the market situations, is if the market will actually manage to break and close above the zone, at that point, we know that on the retest, we could be looking for a potential move to the upside with good probabilities. So if the market from here, we don't know if it will do it, but if we actually get a break on the retest here, how we could be approaching this potential rejection higher. Now, the monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point, we could be looking for a potential rejection higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment I'm running a special promotion in which you have a huge upfront discount on the price of the mentorship program for lifetime access, one-time payment from 497 euros all the way down to only 97 euros. And as an option, since I have partnered with the forex broker Blueberry Markets, if you open an account with them from the student dashboard, you can also get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the timer goes to zero and the offer expires and the price goes back to normal. However, spots are limited, so if they get filled before the timer goes to zero, then the offer will end anyway and price will go back to normal. So I really suggest that you take advantage right now and click here on join now and to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I will see you in my next video.